So the Fed had their meeting last week here, and they are bumping it up, of course, to 0.75, higher than I thought they were going to go. I thought they were going to go 0.50. And at the day of the market, it was interesting because it didn't really move much. In fact, it was up like 2 or 300. And the next day, we just had that plunge as whatever people ingested and felt they were not liking it. I think they kind of really reviewed what Mr. Powell had said, and people were selling hardcore. So if you look at what Powell and his group is doing, they are playing catch up. They're playing major catch up. They know they have some work to do. They are starting to get a lot more pressure, and I think that a lot of people now have really looked at this and said, "What the hell? You guys said there was like no inflation. You guys said this was going to be transitory. This wasn't going to be a problem, and it is." And again, that's why you can't always listen to these so-called experts, because oftentimes they are wrong. And I still think the Fed is clueless. I still think a lot of these people in charge are clueless. So you have to make the best decisions based on what you see. And hopefully, as I make this channel, my goal is to have people who will really take a different perspective and be able to discuss these things. But anyway, the Fed raised the rates, and the day of them, the market was cool, but the day after, it took a deep dive as people ingested what he said and what was going to happen. And after I really looked at it too, he did say some deep stuff. And usually, of course, Powell really tries to just slide things in there very calmly, and he does. But this time I really think that he said a few things that people really reacted to. One of them was, I think, about how if you're a younger person, maybe you should think twice about buying a house. So, anyways, money is going to be tightened. It is going to cost more money to borrow. And when you're talking about this on an economical level for businesses and corporations, if they can't get money so cheap, and if they can't get money so readily available to them, what happens is they have to tighten things. They have to say, "Oh man, we can't spend money so crazily and so irresponsibly like we used to." And in short, what that causes is some of these companies to have less money, and they may be laying off some employees. I think over the past couple months, and even right now, these CEOs and business owners and managers are getting together, and they're looking at things, and they're saying to themselves, "Okay, who is deplorable? Who can we let go if we need to?" And another thing that is really going down is that the spending for people is going way down, way down. We've seen this in the inventories of all the big companies out there: Amazon, Target, Walmart. Inventories are just skyrocketing, and it's because I guess they may have forecasted. I'm just guessing here. They may have forecasted that this spending was going to continue through the consumers, and it doesn't. They have stopped spending. I think a large part of that has had to do with the stimulus everyone was getting. Of course, they're spending like crazy. They got all this extra money. Now that's been all cut off. People have been cut off the government teat, and things are changing. I think people even got used to it for a while. They're like, "Yeah, well, I don't need to worry because I'm going to get another $500 this month or whatever." So now that's all cut off, and we're seeing the implications of everything. So what's going to happen? People are spending less. Okay. Companies have less cash available to them, so they can't venture out as much as they used to. So these are the big dominoes that can to play here. I mean, if people are getting laid off, obviously they're not going to be spending money. People don't have the stimuluses like these do. Obviously, they're not spending. So you have those two things coming into play. And what will be next after that? What does that equal? And to me, that equals earnings reports coming in much lower than expected. So what happens when earnings report come in slower than expected? Well, people sell their stock. Their stock goes down. So you're going to see some stocks possibly going down here. And that is going to cause the whole market to really take some hits. So that could happen. That's a real possibility here coming up. And of course, once the companies, their stock value goes down too, of course, they got to make some changes in the company. Their company's not worth as much money. They may have to lay some people off, So we have that all coming into place. And those dominoes are bad. I mean, those dominoes have a long trail too. There's lots of other stuff that will get hit in this domino fall. Supply chains, products that people are buying in the stores, they all have jobs too. They all have companies that have jobs. So there could be some really major repercussions here if you really see things. And the next thing I really want to look at is the housing market. Okay. Housing market in some areas are still just flying up. But if the interest rates go up, the lending, of course, costs more, and you're talking about a lot more money to pay for these houses on the loans. You could be talking about $1,000 more per month for people, and people, even though people have been spending like crazy, I mean, when you're talking about an extra $600 or $700 or $1,000 a month, you really start to think like, all right, maybe I can't do that. Not to mention that, of course, rates are still rising too. You're like, wait a minute, dang, I don't know if I can do this. By the time I actually process my loan and everything, I'll be paying a really high amount. I don't want to do that. And I think people even in the loan process are going through that, and they're saying, what? I thought I could get this rate. And they're like, no, I can't afford this now. So I believe we're going to see much more inventory hit the real estate market, and that could start some sort of a correction here. We've known for way too long housing prices have been too high, and that could be at the tip of the mountain right now. We could be at or near the tip, and we may be on our way down a little bit here. So of course too, the realty market holds a lot too. A lot of realtors have jobs, all the handymen who fix houses up, construction in new housing. I mean, that's a huge industry that fuels the economy. So if you put the brakes on that, or if that takes a pooper, there's going to be some real ramifications to that too. Lots of jobs up in the real estate industry. It touches a lot of things. So those are the two things that I'm looking at coming forward here. And it all will start with earnings reports we'll start to see. And I think we already have had to see some of that. And they're much lower than what we thought they were going to be. So keep an eye on that.